Let's now get you updates from the business world. Financial services company HSBC is selling its $25.3 billion Australian home and personal loan book to Blackstone in what the companies say is the world's largest ever home loan portfolio transaction. The deal is expected to close in the first half of 2027, subject to regulatory approvals. Blackstone said the loan portfolio will be managed by Pepper Money in Australia. The sale is part of CEO George Elhedery's overhaul of HSBC to simplify operations, improve returns and redeploy capital towards higher growth businesses. HSBC expects the sale to result in a loss of less than $100 million by the first half of 2027, about $300 million in restructuring costs, and around $300 million in foreign currency translation losses, with no impact on its Common Equity Tier 1 ratio. Amazon beat Wall Street expectations after posting strong second quarter growth, driven by its cloud computing, artificial intelligence and chip businesses. The company reported a 20% jump in revenue to more than $200 billion, while Amazon Web Services climbed 37% to $42.2 billion. Amazon said its AI cloud and custom chip businesses each surpassed $25 billion annual revenue run rate. Meanwhile, Microsoft gained over 15% after beating earnings estimates and reporting more than 30 million paid users for its AI-powered Copilot tool. In contrast, Meta shares tumbled after Facebook and Instagram parent posted results which fell short of Wall Street expectations. Artificial intelligence leading company Anthropic has reported that its artificial intelligence models gained unauthorized access to 3 outside organizations during security testing. The company said the incident took place during tests designed to keep its AI models away from real-world systems. Anthropic evaluated more than 141,000 test runs and found 3 versions of its Claude model accessing external systems. The company said the models had internet access due to a misunderstanding with its evaluation partner, Irregular. Anthropic said Claude used basic techniques including exploiting weak passwords and unauthenticated endpoints. Now, this is to happen soon after the OpenAI incident as well. Now, European Union is offering €10 billion in funding to help companies build 7 AI gigafactories as the bloc seeks to narrow the artificial intelligence gap with the United States and China. Joining us now with more on this is DW's Chiponda Chimbelu in Berlin. Now, good afternoon to you, Chiponda. Tell us more about the EU's latest effort to boost investment in AI.
Well, the European Union is aiming to attract 2 times the €1 billion investment in financing that it announced for artificial intelligence. And the goal is for the public financing to draw an additional €20 billion in private investment. Now, the 7 AI gigafactories that would be financed would help the bloc to reach the scale of computing power which is needed to accelerate AI development here in the European Union. And that is according to Brussels. Companies in Europe can bid for contracts to build gigafactories which would be far more advanced than the existing data centers. They would have roughly 4 times more computing power. And that would mean that the EU's current computing power, which is delivered by a network of 19 AI data centers, will be more than double when they come online. Now, this is, of course, part of the EU's tech sovereignty efforts.
Okay, and Chiponda, why has tech sovereignty become such a priority for European leaders?
European leaders are worried about the dependence of the bloc on foreign providers. They are afraid that these services could be weaponized and that European customers could also be cut off from such services without warning or even regard for how that affects them or their businesses. And we did get a reminder of that last month when the US government ordered AI provider Anthropic to suspend access to Fable 5 and Mythos 5, citing national security concerns. It was another example that European users could be cut off from services abruptly. And of course, there are also fears about kill switches and the data that is being collected and how and where that could be used. The problem is that, of course, Europe lags far behind the United States and China. And China, of course, has a huge capacity for electric power for data centers. And the US has the lion's share of private AI investment. And of course, one can think of the likes of OpenAI with ChatGPT and Anthropic's Claude. And even older tech players like Alphabet, Microsoft, and Meta are also investing billions in AI.
Yeah, and it remains a big question whether Europe can catch up. Thanks a lot for joining us, Chipona Chimbulu from Berlin.